Bitcoin soaring to new record highs today, the cryptocurrency cracking the $40,000 mark for the first time in history before pulling back. And check this out. In the last month, Bitcoin has doubled while gold has been left in the dust. Let's talk more about this big break. Joining us now is Morgan Creek Digital Assets founder Anthony Pompliano. Anthony, Happy New Year. Always great to speak with you.
Absolutely. Happy New Year to you, too.
JP Morgan came out with a note just the other day. 146,000 was the price target on Bitcoin. And one of their major theses in that note was that it would be a replacement for gold. And I'm just curious because it seems like all of the other bullish reasons behind Bitcoin have disappeared. And now it's primarily the store of value. Can it continue at the pace that you think it should go with just that one thesis?
Yeah, I think, look, one of the key pieces here is why is JP Morgan so conservative, right? If you really think about in the technology world, we talk about 10x improvements of products. Bitcoin is at least 10x better than gold in every way. And so I think that if you just think of a Bitcoin product that is 2x better and market cap kind of follows that, that would put Bitcoin at $1 million a coin, right? Just 2x gold's market cap. And the key piece here, when I say those numbers, they kind of shock people, but we have to remember that both gold and Bitcoin are sound money principles. Gold is the analog application of sound money principles. Bitcoin is the digital application of sound money principles. And there is not a single digital product that replaced an analog product, but yet is still smaller than those analog products. The digital product is always bigger. And so I think it's a foregone conclusion at this point that not only is Bitcoin's market cap going to flip gold, it's just a question of how much bigger is it going to be? Is it going to be 2x bigger, 5x bigger, 10x bigger? I don't think we know. And the timeline is a question, but it's a foregone conclusion, in my opinion, that not only is Bitcoin a 10x improvement on gold, and the market cap is going to flip it at some point in the future.
How does that $1 million price target, if you want to call it that, change? Because right now we're talking about the replacement for gold. In the corporate world, it's also a replacement for cash these days because of what's going on with the U.S. dollar. So is that, would that be a kicker on top of that $1 million price target, which is already so jaw-dropping?
Yeah, I mean, look, from where we are today, it's about a 20x increase, right? And the other piece of this that I think is really important to understand is that every single corporation, both in the United States and outside the U.S., is going to put Bitcoin into their treasury. They're going to have to. We are watching central banks around the world stuff the economy with liquidity, and people are running around saying, how do I protect the purchasing power? And so gold has served that purpose in some treasuries, but I think Bitcoin is just being underestimated. The fact that every single company that's publicly traded or private is going to end up putting Bitcoin in that treasury, that is a wall of demand that people just aren't accounting for. And so as we're seeing today, just Wall Street institutions are showing up yet. Corporations really haven't shown up yet, and Bitcoiners don't want to sell their Bitcoin. And so you have this imbalance between supply and demand, and it's led to this rapid price increase because that's the only way you can accommodate everyone. The Wall Street institutions have to keep bidding higher and higher in order to solicit Bitcoiners to sell that Bitcoin. When the corporations show up, they're going to have to bid it higher and higher. Now, it's important to also talk about there will be volatility along the way. There will be 20, 30% drops. Sometimes they'll be very rapid. Sometimes they may be prolonged. But over a long period of time, I think that saying that Bitcoin will be equivalent to gold's market cap is just being overly conservative, and it's likely to eclipse it, sometime in the 2020s. So before 2030, we'll see that happen.
Hey, Anthony, it's Dan, and that all makes perfect sense to me. I just have a question about that volatility. If we think about a lot of our viewers are stock market investors, and they're obviously very interested in the price action in Bitcoin, and you make a very good case for it. But the last two sell-offs in the stock market, we've seen Bitcoin really get hammered. Back in late 2018, Bitcoin got cut in half from much lower levels, I think around 6,000. And then when we sold off this year, about 35% in the S&P 500, Bitcoin peak to trough had a 62% decline. Now, granted, it's far, far higher here. Do you expect that sort of volatility and correlation to the equity markets going forward?
Yeah, so I think we've got to separate out. Over long periods of time, Bitcoin is a non-correlated asymmetric asset. In very short periods of time, so March of 2020 was a great example. During a liquidity crisis, every asset sold off. Gold sold off, equity sold off, Bitcoin sold off. And so I definitely think that there can be levels of correlation in short periods of time where there's liquidity crisis or there's high degrees of uncertainty. But over a long period of time, Bitcoin has proven to be not only non-correlated, but also the fastest horse or the most asymmetric asset available. And so if you're an investor and you're looking to get out of dollars and looking for where to put your money and you don't have exposure to Bitcoin, I think you're making a mistake. How much you should put into Bitcoin, that's, each person is different or each organization, but you've got to get off zero exposure. You've got to get exposure to this asset, and then you've got to have a long time preference. And I think that it'll turn out pretty well for you.
Anthony, always great to speak with you. Hope to see you soon.
So thanks so much, guys.
All right, Anthony Pompliano. Karen, what'd you make of all that? And what would you think if a company that you owned in your portfolio said, we're going to put part of our cash store, let's say it was Apple, into Bitcoin instead of short-term investments or cash? What would you say?
I would be a little bit surprised, but how much of it? How much? 2%?
2%, let's say.
That wouldn't change what?
Yeah, 2%. Let's say 2%.
Okay, so let's say 2%. That wouldn't really change the Apple story for me, right? Let's say I thought, wow, they're risking 1 out of that 2%. That's not, if you're in Apple because of a 1%, you expect, so it wouldn't change the story for me. So I do believe that we could start seeing that. Obviously, we've just seen a little bit, right? We've seen Square. But I think we will start to see that. The thing, though, Dan brought up today, that trading today was a little scary for me. 40,000 had hit, 40,200 or so, and within minutes had a 36 handle. So that to me sort of looks like a frothy short-term top. But I'm not going to trade around it. I do a terrible job doing that. I'm just going to hold it and let this thing play out. I think there's still more room to run.
Shepard Smith here. Thanks for watching CNBC on YouTube.